Question 38 asks which one of the following statements is true in respect of an entity's cost of debt. The correct answer here is that when redeemable bonds are traded at par, the formula for irredeemable bonds can be used to calculate the cost of debt. If we look at the other three statements to see why they would be false then, so the first is that an entity's cost of debt will be the same as the yield to maturity from the investor's perspective. The cost to the entity would be net of any tax deduction that they're entitled to take, whereas the yield to maturity that we look at is calculated based on the gross, the full interest figures, ignoring any tax implications. So that is incorrect. The second statement is that when calculating the cost of debt of redeemable bonds, the relevant cash outflows are the gross annual interest payments and the redemption value of the bonds. The reason this one again is incorrect is the difference between the gross and net position. So here we would actually be taking account of net annual interest payments being net of tax. And then the third statement, when calculating the cost of convertible debt, the redemption value should be based on the cash option. This one is incorrect, as actually what we should be doing is looking at taking the higher of the conversion or the cash option when we're calculating the cost of convertible debt. So as we thought, the last of the four statements is the one which is true in this case.